Mhm. Three, two, one. So if you're getting divorced, one big question you might have is, can I stay in my home? And if you reach the determination that you want to stay in your home and you want to refinance, that's pretty much what people have always done in the past. When you're getting divorced, you refinance, meaning you get a whole new loan for the home. So that worked for years in divorce, decades. But now, because interest rates are so high, many mortgages are 2%, even in the ones. I had a mortgage rate that was 1.87%. So if you're going to refinance and buy your spouse out of the home and keep the home, now you might be looking at a 7% interest rate instead of your 2%. And that could be a deal breaker for the whole thing.
Yeah.
So, in this podcast, I want to talk about a wonderful alternative that is happening, and it's the hottest topic in divorce, according to Karla Kyte, my guest. Hi, Karla.
Hi, Jackie.
Thank you so much for being here and bringing this topic to me. You are so right. Loan assumptions, you said, are the hottest topic in divorce. Before we get started on this wonderful alternative that I think is going to be so helpful to people, I want to tell my listeners about you. So, Karla has been a mortgage lender for, like 20 some years.
26 plus. Yep.
26 years. Her daughter works with her in their business, but Karla in 2017 decided to specialize in divorce and become a CDLP, which is a certified divorce lending professional. Karla is a divorced mom, so she went through all of it. And Karla, I love that you're so passionate about helping people going through a divorce, and I love that you brought this topic of loan assumptions to me, because don't you feel like now you're hearing from divorced people like, well, I want to stay in the home, but I can't get a new mortgage. Tell me about that.
Yeah. So I can tell you this whole landscape has changed drastically since the rates went up about 2 years ago. Like that's when this started happening. And so prior to the rates going up, it was kind of no big deal. You just refinanced and you were still sitting in like the twos, threes, or fours. And that was not the refinance was not a deal breaker in how you were moving forward with your home ownership. So after the rates went up, and they didn't just go up like a little bit, right? They went up overnight from like 3 to 6%. It seemed like it just took a few months to get there. So I noticed that with what I do, I was helping a lot of people to stay in the home and negotiate not refinancing their mortgage. And I'll be honest with you, I didn't know that an assumption was a possibility until about like 8 months ago. I realized that there were some assumptions that were being done in the case of divorce. And now what I'm realizing is that almost every lender out there will allow for an assumption, a release of liability in the case of a divorce. But I think the general public does not know that. And I think there's a lot of divorce professionals who also don't know that, like attorneys, mediators.
Okay, so here's what I see happened. Basically, you're right. People used to always just refinance. Now I own the home. They work it out in the divorce. They get a new mortgage. The loan is similar, and it's like maybe, $100 more a month, whatever.
Yeah.
Very insignificant. Then, with the jump of the interest rates, people probably started, I could see this happening, saying, okay, we're going to keep both our names on the mortgage. But there's so many issues that go with that too, because
Yes.
if both your names are on the mortgage, it's affecting both your credit. Both of you are legally liable for it. It doesn't matter what a divorce decree says. A bank's going to come after you if your ex-husband says, oh, now you have a girlfriend, a boyfriend. So I'm pissed and I'm not going to pay my share of I'm not going to pay you child support. So then the person who is having the home can't pay the mortgage. Well, now it affects the other person's credit.
Yeah.
So, okay.
There's
So there's all
definitely,
kinds of problems in
yeah,
keeping both the names because when you get divorced, you just want to be separated. You want everything separated financially. You don't
yes.
want to be legally bound to anybody.
Yeah. And I see a lot of cases where people have made deals um, for financial reasons to stay on the mortgage, and then it doesn't end well. Um, and you really shouldn't. If you're going through a divorce, you should get divorced. You should finalize everything. You should be separate. You should not be tied by a house.
All right, so now what Karla and I are telling the listeners is that there is an alternative where you can still have the same mortgage you had with your ex, but he's off the mortgage or she's off the mortgage. And it's called a loan assumption. So tell me, Karla, so Karla wrote this article all about this for Divorce Girl Smiling, which you can read on divorcegirlsmiling.com. And you talk about that even divorce professionals don't really know how to go about doing this. So tell my listeners what they can do if they want to take over a mortgage from their spouse at the same rate, same mortgage, but it's just their name and it's legal and they're the only one on the mortgage.
Yep. So the first thing is when you call your current servicer to find out if your loan is assumable, you have to know to ask the right questions of the right people. So if you just call and say, is my loan assumable? You're going to get told no, like 99% of the time, because if you are in a Fannie Mae or a Freddie Mac loan, those are not assumable loans. But that's the thing. In the case of a divorce, you can request a release of liability, which is like the same thing. So you have to be very specific and say, I am going through a divorce, and can I assume this loan for my husband or my wife or whatever? You have to specifically say that you are going through a divorce. Otherwise, they're just going to say no because it's not an assumable loan, meaning another party cannot assume that loan from you.
All
So
right, now wait, I want to ask something. Has it always been this way, but no one ever took advantage of it?
So yes, like I think so. I think even those of us in the lending industry didn't realize this because we also have always been told like these are not assumable loans, not assumable loans. But if you really dig deep, and this is what I started realizing, the deeper you dig, you can find out that these loans are in fact assumable in certain instances. So there's also different instances like I believe that you can also assume a loan if it was if you were awarded the home due to a death. Um,
I see.
so that's a possibility too,
Yes.
but we'll stay on divorce. So it's just really important. And attorneys don't even know to tell their clients this. And I also heard, I met with a group of attorneys a couple months ago who said, oh, we specifically tell our clients not to say you're going through a divorce because we don't want any repercussions to come of that phone call. But the lender cannot do anything to you because you're going through a divorce. You're
Okay, I want to
protected,
stop
first
you
of
right
all.
there because this is very interesting because I think I know what happened. I think that mortgage rates went up so quickly and they had been so low for so long. And then mortgage lenders like you, especially CDLPs, probably started looking into it because it's like, okay, what are our options? We have to figure out any option. And so people started calling and asking. And so what Karla is saying is that if you mention you're going through a divorce, then they're going to make an exception, hopefully. Not every time, but it's worth a try. The
Yeah.
other thing is, what would be the disadvantage? Why do these divorce lawyers think it's bad to tell a mortgage lender that you're going through a divorce?
I think they just don't want to alert the creditor that there's something potentially uh, something that could cause them to potentially maybe not make a payment or make a payment late or something like that. But it doesn't matter. You're protected. There is nothing a lender can do. A lender cannot call your note due because they find out you're going through a divorce. So there's nothing they can do. Now, if you guys can't make your payments, they can eventually foreclose on you. That's a completely different story. But they can't, simply because they find out you're going through a divorce, do anything different with your loan. And so I don't know why that was said in that way. That doesn't even make sense to me. But you know, just keeping your cards close to your chest for whatever reason, they were just telling people, don't just call and ask if it's assumable. Don't say anything about going through a divorce. So I don't know. That's kind of silly to me, but that's exactly what they do need to do. Otherwise, they will be told, no, absolutely not. So yeah, that's the first step. They've got to find out if they can do the assumption, and then they need to ask the lender to send them the guidelines for that assumption. So most servicers, the person that you make your mortgage payment, or the company that you make your mortgage payment to, most servicers will be able to send out to you an assumption package. And so that package will be a detailed outline of everything that they need from you to start the assumption process. So all of this needs to go in that phone call. Can my loan be assumed in the case of a divorce? And can you please send me that assumption package?
You're listening to the Divorced Girl Smiling podcast. My name is Jackie Pilosoff, and I'm your host. I'm here today with mortgage lender and CDLP, Certified Divorce Lending Professional, Karla Kyte. And Karla and I are talking about loan assumptions. And we're going to take a short break. When we come back, we're going to move on to what do you do after you get the packet? How do you qualify? What do you need to do? And then, what the benefits are. So we will be right back. Welcome back to the Divorced Girl Smiling podcast. My name is Jackie Pilosoff, and I am your host. Are you going through a divorce and wanting to keep your mortgage, keep your house, but you feel like it's not an option? Well, guess what? It is. It's called a loan assumption, and it's definitely a consideration for you. That's what we're talking about today. My guest is CDLP, Certified Divorce Lending Professional and mortgage lender, Karla Kyte. So, Karla, we went on the break and you said you get this packet. So what do you do after you get the packet? Like, do you have to qualify? Let's say you're taking the mortgage from a dual, like an income for two people. You're getting divorced. Now it's just going to be you. Do you have to qualify like you have to for a mortgage? How does that work?
Yeah, so that's the kicker. You do have to 100% qualify then on your own. And so there's a lot of reasons why an assumption won't work or is not actually the best idea for you. You might think it is because you have this screaming low rate, you know, in the twos or in the threes, and the thought of going to seven just, you know, makes you sick. But it's not always the best option, and it's not always an option, period, because you can't actually qualify for the assumption. So I think
Okay,
the
but
biggest thing,
Karla, you have to qualify if you're getting another mortgage anyway. So isn't it kind of the
correct.
same thing? You're either going to qualify for it and you're not going to get another mortgage, or you're going to get both the loan assumption or the option to do another mortgage. I mean, it's the same thing.
Right. If you qualify. If you don't
Right,
qualify, you're not a homeowner.
right.
So that's where me and my services as a divorce mortgage planner really come in to help you, because you know, when you did your loan, you were working with a lender like me that helped you through this process. We were your contact through that entire process, whether it was a lender at the bank or a lender for a mortgage company or whatever. You had a person of contact that you worked with. When you're doing a loan assumption, it's like you're dealing directly with the underwriter, kind of. You're not, but that's kind of what you are doing. And so it's really for you to handle your own assumption, unless you qualify very, very easily and very well. I would say it's going to be a long, pretty difficult road, because you don't understand mortgage guidelines and you don't understand what qualifying income actually counts, or how to negotiate your separation with your spouse to make sure that you qualify. Like you might have a really great job and you'll qualify fine. But often what we find is that people either need child support or maintenance to help them qualify, or maybe they can't handle the debt load that they currently have. And so we need to allocate certain debt to their ex-spouse so that we can get it out from under them. There's like, that's a whole other thing, is just figuring out how to qualify for this loan. And then, there's certain things too, like if you do need support to qualify, you're going to have to show proof that you've received it for 6 months before you can qualify. So there's a timeline too. So, if you agree in your settlement agreement to assume the loan within a certain time frame, like let's say 6 months, which that sounds super reasonable. But if you need the support to help you qualify, you can't even really apply for that assumption until
Well,
6 months has
well,
passed.
hopefully you've been getting temporary child support
Most
and
people
those
don't.
that doesn't count.
It does count, but most people don't get it and they don't do it right. Again, they need divorce mortgage planning.
Right. So
Temporary orders
Carla,
are hard.
okay, sorry. Can somebody go to you, even if it's a loan assumption, and say, can you help me with this? Because you don't really make any money on it, do you?
I actually do. So I actually provide a
All right,
service.
let's talk about that.
Yeah. So I actually provide divorce mortgage lending as a planner. And I also, if at the end of that road, what works best for you is to do an assumption, I can help you with the assumption process. If what works best for you is to do a loan, then you can do a loan. You can move on and do a loan either with my company or with another lender. But my divorce mortgage planning just helps set everything up. And then I can also help with the assumption process if needed. So
And that sounds like a no-brainer to me. Now, I know you're based out of Colorado. Can you help in any state?
absolutely. Yes.
Love it. So
Yes.
anybody listening, if I want to paint a picture for you, you think you want to stay in the house, you think you're going to get it in the divorce, but you don't want to go from your 2.5 mortgage rate to a 7% one that is the rate today. You can call Karla, do a little mortgage planning. She'll help you along in the loan assumption. And then it's either going to work out or you're going to have to do the 7%. But at least with Karla, you gave it a shot.
Yeah.
And how would you say the percentages of people getting loan assumptions versus not getting them?
I would say it's probably 50-50. The other big thing too, though, Jackie, is that you cannot pull out any money in a loan assumption. So that's why you might be able to assume your loan, but you're not going to want to, because you can't use it to buy out the other spouse. So you can't pull any money out to pay off debt or to pay off your ex-spouse, the equity in the home that's
You have to
owed.
keep everything exactly the same.
Everything exactly the same.
Okay,
So
but
all
Karla,
the adjustments.
the good news is that let's say 3 months later, when you have already assumed the loan and it's in your name, now you can treat it like a regular mortgage. So you just have to wait.
Well, I mean, yes, but that still doesn't help you get money out to pay off the other spouse.
Oh, I see.
Yeah.
But
So
you
you
could
still
have it
have
in your
to,
divorce decree that you're going to wait 3 months and then you're going to pay the person because,
right,
oh,
but
but then you would have to refinance.
right, how are you going? That's the big thing, is how are you
Uh-huh.
going to pay them out? So, like, here's the example. If you have a $400,000 mortgage that you're trying to assume and you owe your ex-spouse 100,000, you can probably come up with that, maybe with your other assets, or you could get a small home equity line of credit or something like that. That makes sense because that ratio, 400,000 at, 2.75% to keep it at that, and then take out a smaller amount on a HELOC, that would probably make sense. But if the mortgage that you're trying to assume is only like 200,000 and you owe your ex-spouse 400,000, and you're negotiating your retirement or pulling out a HELOC, all this other stuff, just to hold on to that interest rate for that small amount of money that you have tied up at that low rate, it doesn't make sense. So we really have to put it on paper
So
and
these are the kinds of things. This is why I love your divorce mortgage planning, because you can
yeah,
sit down with someone, ask them what their goals are, listen to their needs, and figure out, should you do the loan assumption? Should you suck it up and get the higher mortgage rate because it's
right.
not really going to make a difference if it's only a small amount? Or do you do something else?
Yeah. Yeah.
Oh my gosh,
There's so many options.
this is like so a no-brainer. You know, it's so important. And I also want to stress to my listeners that Karla will also work with your divorce attorney, with your financial planner. She'll have these phone calls with them. She's nodding, by the way.
I
So,
love, I
so
love,
that so what I do in Divorce Girl Smiling is try to send the message to everyone that you need a divorce team. And what that means is exactly what Karla and I are talking about. Your team is your divorce attorney, possibly your mediator, your real estate agent who specializes in divorce, and then someone like Karla who can help you, because oftentimes the most difficult and hardest, most complex part of a divorce is the home.
yeah, totally. Especially right now. It never used to be like this, Jackie. This is, this is the last 2 years. This is all new territory. And I kind of feel like, a lot of the people that went through divorce, in the very beginning when the rates went up, um, I mean, they kind of got robbed. Like this was,
Right.
the whole assumption thing, not, and even myself, like I even was in that camp. Yeah, you can't assume it if you have a Fannie Mae or a Freddie Mac loan. But it simply is not true. I mean, you have to figure out if it's the right thing to do still, but at least it needs to be on the table for one of the scenarios that could work for them moving forward.
So if you like what you're hearing and you want to consult with Karla, you can find her in the trusted professional section of Divorce Girl Smiling under mortgage lenders. But then Karla, also, they can find you at Cross Country Mortgage. But what's your exact website?
Yeah, so actually for my divorce mortgage planning, I have to have a completely separate website. Um, so they can either call me at 720-400-7423, or they can email me at kkyte@mydivorcemortgageplanning.com. So that's really the best way to connect with me. You can connect with me through my lending site, but and that is, I'm the Kite team with Cross Country Mortgage. But if it's divorce mortgage planning, it has to be completely separate.
So
And
what I see in the future is I bet Karla's in the process of building a website for this.
yes, I am. It should be launched very
How did
soon.
I know?
Yep.
But yeah, if you want to reach Karla, you can also go to Divorce Girl Smiling, her email address, her contact info. You can get in touch with her through her website. That's fine. And then you guys can take it to a phone call or a Zoom
Yep.
conference to talk about it.
Yeah. I have
Karla,
her free consult.
thank you so much. This is so helpful to people. I really respect the kind of work that you're doing because you're really helping people in a tough spot.
Yeah, it's crazy. It's just a different place than it was a few years ago.
And to my listeners, the best part about a loan assumption, if you can do it, is that you will be separate from your ex. So I just want to stress one more time. I personally, I'm not saying I'm a know-it-all, but I am very against staying on the mortgage together and having this commitment, even if it's in writing, that, oh, you're both on the mortgage. It's just bad. It's not a good idea because you don't know what's going to happen in the future. Your ex could get a girlfriend who could be extremely influential on him and mess that up. Anything can happen. And things just don't stay the same with a divorced couple. We both know that, Karla, right? I mean,
Yeah.
things are always changing.
Yeah. And
So,
I mean, you're getting divorced for a reason, right?
right.
Divorce. Finalize
And
it.
cutting the ties when it comes to legal and financial obligations
Yeah.
is just a smart thing to do. And I'm not saying you can't be friends with your ex, but it will be genuine friendship if you're not relying on, well, I better not be rude or I better not do this or mess anything up
Yeah.
because he's still on the mortgage or
Yes.
something like that. So
Yep.
really what a loan assumption does is it gives you so much freedom.
Yep. And I've had people say that too. Just relief that they know that there will not be that financial tie any longer. I mean, when you have kids, there's always a tie. But to get the financial tie cut is, I think, very, very important.
Well, Karla, thank you so much for taking time to talk about this.
Thank you, Jackie.
And to my listeners, you can find Karla once again in the trusted professional section of Divorce Girl Smiling, along with so many other wonderful, trusted, vetted divorce professionals. You can also go to Divorce Girl Smiling to listen to more podcasts, download my mobile app, read articles, or sign up for my free consult. Thank you so much for listening, everyone, and we'll talk to you real soon.